Hello, hello, hello. Welcome to Trading Made Easy right here on YouTube. I want to pop in really quick. Let me get situated though. Okay, looks like this is how it's going to be. I want to pop in really quick just to share with you the awesomeness of the triple arrow system. For those of you that do not know me, my name is Janice and I am a currency trader. And I use the triple arrow system as my primary trading platform to help me to identify trends and also to help with a great entry. Amongst other things, there are many benefits to this system. And what I do on this channel, as well as my private Facebook group, is I teach simple, easy trading strategies that even a 10-year-old can do. And we do that using the triple arrow system. So today, I want to just pop in really quick to share with you another simple, easy trading strategy. Now, what you have to realize is that everyone sees the market differently. Everyone sees the market differently. Now, there are definitely rules, foundational rules and principles that everyone must follow and understand. And with that, you can incorporate that with the way that you see the market, the way that you choose to trade. Okay, so just stay true to those foundational principles, and hey, you should be okay. One of the things that I also recommend highly is that you back test. This is your way of identifying the trends, the patterns for each pair, because each currency pair has its own behavior. So you have to back test, meaning you have to go back in history of that particular currency pair and see how it reacts to certain things like time frames, times of the day. No matter what time frame you're on, but what time of the day on that time frame, does it act a certain way, and does it do that consistently? So just little things like that, you want to start to identify patterns and trends within that currency pair. So that's how you back test, by going left where all of the historical data has taken place. So just a little tidbit there. One of the things that I would encourage you to do is, while you're watching this video, go ahead on and subscribe. Just get it out of the way. That way you will be kept abreast. You know how it works when valuable videos come out. What you're going to get here at this channel is simple, easy trading strategies. I have a group called Trading Made Easy on Facebook. I'm going to leave the link in the description so that you can request access to that group. There you'll get additional resources and information as it relates to trading simple, easy, in and out. I am a conservative trader. I um, I don't mind building slow, and that's what I teach. I also teach a 20 pip strategy that will get you consistently 20 pips. Now, 20 pips can be very, very powerful, provided that you follow the rules. It's that simple. Okay. So today, as a matter of fact, is one of those simple, easy trading strategies that I'm going to show you with the triple arrow system, where you can get 20 pips in the market every day. Again, I'm that trader. I'm a scalper intraday trader. I go between the two. But primarily, I like to see my profits in my account daily. Now, one of the drawbacks in the industry is those that's amongst the 9 to 5 community, meaning when you're working a job, basically your energy is being depleted on that job, whatever it is that you're doing. Meaning, when you get off work, you're tired, right? You're tired. Also, you can't, for any length of time, burn the midnight oil trying to trade at London or 12 at midnight, because why? You have to get up for the next work day. So this strategy is specifically, it's for everybody, don't get me wrong. But in mind, I had the 9 to 5 community in mind when I when I back tested this and identified this strategy. And so I'm presenting it today for the 9 to 5 community. You can utilize the Asian session, which is the slowest session amongst the sessions, the various sessions in the market. You can utilize that. Why? One is the slowest session. It's not a lot of volatility. It's pretty steady. And that's a good thing, right? That's a good thing. And also, the Asian session begins at 5 p.m. Eastern Standard Time. So, what's basically happening around that time frame? Around that time frame, people are getting off work, right? They're getting off work. So, between 5 and typically 10, you can certainly get the 20 pips, the 20 pips. And you can also be in the bed at a decent time so that you can get up the next day for work. So this is truly, truly for you. As with any strategy, ladies and gentlemen, there are rules, there are confirmations that you must have. And that, my friend, is what I'm going to share with you today. So let's get started. Let's get started. One moment, and I do apologize. Okay, so triple arrow system. This now here's the thing: you have to have the system. Yeah, you have to have the system. Once you access the private Facebook group, the link to the system will be in the pinned post of that group. Okay, the pinned post of that group. So access the Facebook group, request permission. I will approve you, and then not only will you have the resources there, but you'll also have access to purchase the triple arrow system. You want to get this system, ladies and gentlemen, for various reasons, but I'm not going to get into that. Go back in some of the other videos on the channel, the YouTube channel, and also when you gain access to the Facebook group, you will have videos there where I talk about how to maximize the triple arrow system, the benefits of the triple arrow system, how you can use this system to consistently profit in the market. It's very powerful. So access those 2 resources so that you can get abreast on the system itself. Now, let's get into the Asian 9 to 5 strategy. Now, the first thing that we're going to do with the Asian 9 to 5 strategy is we're going to put 2 moving averages on the chart: the 50 moving average and the 20 moving average. The 50 moving average and the 20 moving average. And they're simple and it's set to close. So you want to put that on your chart. Okay, put that on your chart. Then what we're going to have everything that we need. We got the triple arrows with its components, and we have the MACD with its components. Now, what you're going to do, let me get my glasses. Okay. What you're going to do for the Asian session, as I mentioned, the Asian session starts at 5 p.m. On the my settings is 6, but it's still 5 o'clock. Okay. So the previous candle is what you're monitoring. The previous candle is what you're monitoring. So the close of the 4 o'clock candle is what you're going to use to identify the position that you're going to take. Another rule: we always trade on the side of the trend. If you don't know what the trend is, no problem. That's why you have the triple arrow. Because one of the awesome benefits of the triple arrow system is that it helps you to identify the direction that the market is predominantly going in, the trend. And that's identified by the big arrow right here, the big arrow. The big arrow, whether it's going up or down, it tells you where price wants to go. In this case, it's going up, telling us that price is preparing to go into a bullish trend. Okay, a bullish trend. And again, previous videos, I go over how to use the triple arrow system, what the components mean, and all of that. Okay, so I'm not going to do that here. For those of you that may have questions, just go back to those other videos and you'll get a full understanding of the components of the triple arrow system and how it's used. Okay, so triple arrow, the 4 o'clock candle. is what we're looking for. And what we're looking for, if we're first going to identify what positions we're going to be taking. So if we were trading this pair euro odd, is what it is, euro odd right here. And let's say we're at this point. Well, I'm gonna look left to see what is the big arrow telling me. Is it telling me that we're in a predominant downtrend or an uptrend? So look left because you're looking for that big arrow. That's what you're looking for to tell you that. And that's going to tell you what position you should be taking. Okay. So we got the big arrow telling us is bullish. Okay. Got the big arrow telling us is bullish. So we're right here at the 4 o'clock candle. You see that right there? Now, we're only looking for buys. Why? Because the big arrow tell us is bullish. We're only looking for buys. Now, what we're looking for to help us to determine when to get in, we're looking for the candle to close above the 50. We're looking for the candle to close above the 50. When candle are closed above the 50, we're going to line that candle up with the MACD, which is down here. Now, the line this candle up. It did not close above the 50. So we're not going to take it. You have to be okay with missing out on some pips because, again, I'm a conservative trader. I'd rather wait to get my pips than to take chances on drawdown and all of those things, right? And when you also increase your skill set, you'll be able to do a little more, okay? But I'm not teaching it that way. So if price is between the 50 and the 20, that's indecision. That's risky. If price is in between the 50 and the 20, that's indecision. It's risky. Okay? That doesn't mean that you can't get your 20. It doesn't mean that. It just means that it's not the best quality trade. And so we focus on quality trades. And that means sometimes what? You have to wait. But it's worth the wait, guys. It's worth the wait. Trust me. Okay. So those are the rules, right? We're looking for a buy because the big arrow is going up. We do not trade in between the 50 and the 20. If price is operating, closing in between the two moving averages, we wait. We wait. So we have the 4 o'clock candle. It closed below the 50, right? So we're not going to take that. We want our candle to close above the 50. So at 5 o'clock is when the session begins. And the candle closed above the 50. Now we want to take our cursor and line up the cursor on that candle and look down at your MACD. If the MACD is either above the what I call it the 0-0 line, the midsection that separates the top from the bottom, or the bulls from the bears, or the buys from the sells, either way you want to look at it. If it's above that or it's going through the 0-0, that is a strong buy to the upside. If it's above the I call it these are volume indicators. If it's above, you're in buyer's territory. So that's good, right? That's an additional confirmation that you're in buyer's territory. We're only looking for buys, remember? So right here is where you would get in. Now, ordinarily, under different trading circumstances, you wouldn't trade at 5 o'clock because that's the beginning of the session. That's the beginning of the session. The spreads are very, very high. Very, very high. Now, there is an exception in this strategy because typically the spreads are high for that first hour. After that first hour, they tend to go back down to the normal spread amount for that pair. You also, to help minimize that spread, you can also trade currency pairs that are typically low spread currency pairs, like your Euro USD, your USD JPY. Those are typically low. You can go into your quotes, your pairs, and you can see what the spread is, and you can base it upon that as well. Okay. Now, what I would not recommend that the currency pair that you trade are your GBPs during this time. The spreads are ridiculous. I also would not recommend that you trade your NZDs and your odds during that time. You can wait to after 5 o'clock candle close and do it. But if you want to get in and get out at your 20, I recommend the some of the major pairs, your Euro and your USD. Okay, so back to the strategy. So it closed above the 50. This is where we will get in. We will get in when that candle closed. Is market execution. Market execution. And you'll just take it up for 20 pips. I don't care if it goes to 50 pips. Oh, well, you just missed out on those additional pips until you build your skill set. And I can help you with that as well. I have a private coaching session that I offer as well. And I do extensive training inside of my Facebook group. So again, gain access to the group. Okay. So just 20, just 20. Price closed above. We lined up. Look at the MACD. It went through the 0, 0. You see your MACD line, which is your blue line. It has penetrated through the 0, 0 line at mid-session, meaning it is in buyer's territory. So we are good to get in on a market execution. Take it up, press down on your cursor. That becomes a pip counter. Take it up to 20 pips. As you can see right here is where you would have been taken out of the trade in profit. So what I recommend that you do is you market execution first, then go back to modify your order to put in your 20 pips. Now, another way that you can determine your 20 pips is the entry. Whatever your entry price is, you take the numbers after the decimal. The numbers after the decimal. Let me show you. Okay, so in this case here, we're kind of overlapping. That's okay. Let's say you did get in. You got in at 1.61333. You're getting 20 pips. Here's the rule of thumb when you're doing it manually. You always add a 0 to whatever the pip count that you're going for. So if it's 20 pips, then you're going to add a 0 and it'll be 200. Okay? So you take the price that you got in at, and that's going to be the numbers after the decimal. The numbers after the decimal. In that case, it was 61333. You're buying, so that means you are adding. Prices going up, so you have to add. When prices going down, what are you doing? You're subtracting. These are things that you have to know, okay, because it'll mess you all up. So you're buying. So we're adding 20 or 200. Exactly, 200. Remember, we always add a 0. If you were going for 25 pips, then it'd be 250. If you were going for 50 pips, it'd be 500. If you were going for 10 pips, it'd be 100. So you get the point. Always add a 0 after the pip amount that you're going for. So in this case, we're buying, so we're adding 200. And I don't think you can see that because of the parameters on here. Okay, so your take profit price would be 1.61533 because this is the number after the decimal. So that becomes your take profit. So 61533. Let me show you on here. We got in at the 33. Let me make sure. Okay, good. Now, Watch the pip. The pip number is the second set of numbers. 61533. 61. I'm going to 20. Um, and sometimes, with the cursor, I can't get right on 20. But okay, right there. You see that the second set of numbers, 201, always put a decimal between the last two numbers, and that becomes your pip count. So 201 is actually 20.1 pips. Now, the third set of numbers you see there is the price associated with that pip amount. And what is that price? It's 1.61534. Remember when we did the calculation, it was 61533. That's only because I can't get it. It keep moving, so I can't get it right on 20. But you can see it's the same thing, the same number. Okay, the same number. So I'm showing you two different ways that you can calculate your take profit. You can use the pip counter in MetaTrader 4, which is the crosshair. You just click on it, hold it, and you can move it up and down. You can move it up and down. Move it up to 20 pips. And one thing I would also recommend is that you do like maybe 22 pips, just so you can cover some spread. So you can net 20, right? But if you do, so between 20 and 22 pips. And then you would use the third set of numbers as your take profit price. And you're good. Voila. And that is truly the strategy. That's truly the strategy. So let's go over the rules. The rules is the 4 o'clock candle. Wait for it to close. Where did it close? If we're buying, it needs to close above the 50. Did it close above the 50? No. We don't take the trade. We don't trade in between the two moving averages. Not because you can't get your 20, but because it's not the best quality trade. Okay? So we wait until price close above the 50. When it closes above the 50, we align, we'll get our crosshair, align it, that candle, look down at your MACD. If the MACD is above, then you're in buyer's territory. If the MACD has crossed over your midsection, your 0, 0 line, you're in buyer's territory. That's a confirmation for a buy. Another confirmation for a buy with the MACD is if the blue line is above the red line. So you have all of that going on right here in this particular case. It has crossed over the midsection. The blue line is above the red line. And where are we? Right here. You're crossing above it. You're crossing above the 0, 0. So you're good. Okay? If you came and it was above the on top, that's buyer's territory as well, you're good. So that's why you want to use the MACD to help you with your confirmation. Then you take the trade for 20 pips. This is how you get 20 pips consistently in the Asian market. The Asian market will give you anywhere from 25 to 50 pips. You're good for 25 to 50 pips. But we want to focus on quality. And though it will give you 25 to 50 pips, and it could possibly give you more, but that's the minimum range, 25 to 50 pips, it could be going in the opposite direction. That does you no good, right? Until you build your skill set and you're able to identify that and you can kind of trend trade. I'm not against it. I do it. But you want to really, really know what you're doing and be able to look at several different confirmations, right? But 20 is a good, safe number. Following these rules, you can consistently get 20. Okay? So that's day one. Now we're here, end of the day, right? This is your 4 o'clock candle. We're looking for buys. We're looking for buys. That's it, because we're trading with the trend. So right here is the 4 o'clock candle. Did it close? Where did it close? It's First of all, it's between the two moving averages. So we already know it don't even matter. We're not taking it. We're waiting for price to close. In this case, because it pulled down, right? It pulled down. So we're waiting for price to close above this 20. Okay? And the reason it's the 20 and not the 50 is because we've had a pullback. We had a pullback, meaning when you pull back from a buy, you're going below the 50. So if we're still looking for buys, it has to travel above the 50, right? And the 20. I hope that didn't confuse you. The 50, like right here, is where the 5 o'clock candle. It closed above the 50, but it's still in between the two moving averages, so we're not going to take that. We want a clear breakout from the moving average. So we want it to close above this 20 for this particular trade. Once it closes above the 20, we're going to take our crosshair. We're going to line up that candle, look down. Where is the MACD? Because we're only looking for buys at this point. Where's the MACD? The MACD is, where's it moving? First of all, the blue is on top of the red. That's one check for the buy. And it is moving over or across or through the 00 line on the MACD. Another buyer's confirmation. So you can take that trade for 20 pips. So now we go market execution, press your cursor, go up 20 pips, 20.5 pips. That price, 1.61596, becomes your take profit price. It's that simple. And you would have made your money right here on this particular candle. It's that simple. So that's day 2. Now, day 3. 4 o'clock candle is right here. 4 o'clock candle. Are we taking it? No, we're not. We're only looking for buys. Remember that. Are we taking it? No, we're not. Why? Because it's in between the two moving averages. That's risky. What are we waiting for? A breakout. We do nothing until we get a breakout. So the breakout in this scenario is above this 20, right? Because it's pulling back and it dropped down. Now, this is a great counter trend, but I'm not teaching that because safe trading and high quality trades is what you really, really want to go after. The triple arrow system tells us the direction of the market, so we're going to follow that. We're in a bullish trend. Just because you're in a bullish trend or even a bearish trend doesn't mean it's not going to retrace. That's basic price movement that happens. We just wait. We just wait. So this particular, because this is a 9 to 5 and you got to get up, you can't stay up late. This may be a day that you don't take this particular trade on this currency pair. Nothing is stopping you from just sifting through the various currency pairs because you have your triple arrow on all of them, and you look for your trade that meets your criteria. This particular day and this particular pair, it did not meet it, but you still want to maintain your 20 pip daily profit. Go to another pair. It's that simple, and use the same criteria. Because trust me, you can get 20 pips per day utilizing this strategy. So when did price actually break out? When could you have gotten in this trade? Right here. So we got 5, 6, 7, 8, 9, 10, 11, 12, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 o'clock in the morning. Guess what? You're at work at 10 o'clock. For those of you that are not, or those of you that can, operate your phone on your MetaTrader, you still could have took it at that point. You could have. Most people that work are not in that position. But again, if you find yourself not in If the pair is not meeting your criteria, then go to another pair. You will find one that will. Okay? So it did meet it here. Let's line up this pair with our MACD. Our MACD, oh, I'm glad this happened. I'm glad this happened. MACD is below our midline. That's seller's territory. It's right at a crossover where the blue line is crossing above the red. It's right at that point. But this is not a trade that I would recommend you take, because anything below, when the moving averages on the MACD is below your 0-0 line, you're in an overall bearish market. The sellers are in control. Remember, high quality. So I wouldn't take it. That's what I'm teaching you all. I would not take it. You want to wait for your MACD, your moving average, to be over, penetrating through your 0-0 line, or completely above your buyer's territory. That would be the most quality position to take. Now remember, it doesn't mean you can't get your 20 if it wasn't, but it's just a higher risk trade. And we don't have time to lose money, right? So I would have waited on this, and I really would have gotten in right in this area, right? So that would have been this candle here, and you could have taken that up to 20 pips, right? And you would have made your money on this wick. See, right in here is a lot of indecision too. A lot of indecision, but you would have made your money still right here on this wick. 20.1 pips. Okay? So I hope that helps. Back test this, review this video over and over again. Write the confirmations down. Write the confirmations down. Have it with you when you're trading until you can do this mechanically. Okay? Have it down. So make sure we don't trade in between the moving averages. We only trade with the trend according to the triple arrow. If the triple arrow is bullish, we're only looking for buys. If the triple arrow is bearish, we're only looking for sales. Okay? And we're waiting for the price to close above the 50 or the 20 moving average. We don't trade in between. We line up that candle with our MACD to confirm the direction as well. Okay? And that's it. So review the video and subscribe to the channel so that you can stay abreast. Also go to the link that I'm going to put in the description to gain access into the private Facebook group so that you can get more knowledge, more tips, more strategies, and more profit. So until the next time, guys, you all have a great weekend. Have a great one. Bye-bye.